Hi everyone, my name's Nick Lambert. I'm the CEO of Doc, and welcome to Identity 3, which is a podcast all about Web3 and digital identity. I'm delighted to be joined today by Alex Lyashok. Alex, thanks for coming on.
Thanks, Nick. Pleasure to be here.
We're talking just before we started, Alex, and obviously do a little bit of research before we have a guest on, and the reading of yours was probably more extensive than most. We were joking before about how busy you've been in your working life. And just to give the listeners a bit of an insight into that, Alex, you've been working in the technology industry for since 1997, so quite a few years now. You've got multiple degrees from the Moscow Institute of Physics and Technology, and also an MBA from New York, which is the Stern School of Business. You're currently with Merit Protocol, which is a startup you founded about 18 months ago. And of course, that's how you and I have met. And prior to that, you were the CEO of WorkFusion, which was a leading software as a service provider for intelligent automation for Fortune 500 companies, and working specifically with in the insurance and financial sectors. And you're actually CEO there for quite a while, 5 years. So I'm sure that was an interesting time for you as well. Even prior to that, I saw some interesting pictures of you in the New York Stock Exchange, because prior to that, you're with a company, I don't know if it's EPAM is the acronym for it. Looked like you had multiple positions there, but also looked like you had both, I would imagine, the fun and the stress of taking a company public, which a few people have done, but I'm sure that's an interesting journey for you, a lot of fun and a lot of stress. And you were there for quite a few years as well. And then finally, in amongst all of that stuff, whilst you also found Merit Protocol, you were also a partner of a VC firm, New Layer Capital, which is really looking in and around the intersection between blockchain and sustainability. So I don't really know how you find the time.
Thanks, Nick. That's a very generous introduction. Yeah, my personal background is that I came up as a software engineer. I'm Ukrainian originally, but as you mentioned, went to school in Moscow and really started to work in tech. As soon as I found the time, even while doing my studies. But I spent all of my professional life in New York, where I moved right after school, and all of it in enterprise software. So I had the chance to see how technology has evolved in the past 3 decades or so. And it's always exciting, but I think the current wave of artificial intelligence, the current wave of Web3 is a very exciting development. So I'm looking forward to today's discussion.
Yeah, fantastic. Yeah, thank you. So let's kick the ball, get things moving forward, Alex. So can you maybe tell people what does Merit do? What is the company set up to do? What kind of markets is it looking to target?
Yeah, so we are building this company because we're on a mission to make better products for employees based on to fully realize the potential of their work record. So as we all have firsthand experience, career track record is one of, in many places, it's the biggest asset that a person has, because it essentially serves as a predictor of their income, and income is the main asset for many people in the world. But it's very difficult for many people to get access to good products, because today, even where we are, access to employment data is very difficult. And so it's very difficult for companies to make products that are based on that.
Yeah.
And so we've set out to build a company that solves that problem. And we have a particular focus on financial services industry, insurance industries, where the access to data is regulated and is under stringent controls. But it's very important to the products that they make, loans, insurance policies, and things like that. So we have started our journey not too long ago. Nick, as you've mentioned, only just over a year ago. But we made this our mission, and so we can dive deeper into it.
And it's an interesting use case as well, Alex, because I remember one of the things that stuck out in my head from some of our earliest conversations, something that I hadn't considered is a big part of what you guys work on solving is really reducing the amount of red tape or even bypassing that for people, employees, as you say, looking to access financial services. And I think you highlighted, and I don't know why it stuck with me, but there's a kind of large body of people, particularly in America, who take out 10, 12 loans, relatively low value loans every single year. And for those people, having to go through the red tape involved in processing a loan is extremely arduous. And that was a really interesting use case for your technology, and to show how quickly you guys could make the person applying for the loans, their lives so much easier. Is that the kind of main use case that you would see, or things like that?
This use case is an excellent illustration of why the problem exists, because for listeners who don't know, even in a country like United States, but that is even more relevant worldwide, in a country of 300 million people, 20 million people take out large number of very small loans to kind of meet their daily financial needs. So this could be on average a $400 loan that they on average take out 8 times a year. So to meet emergency needs, but also just kind of to live paycheck to paycheck. And the challenge for those types of consumers is that kind of today's value chain of how a product like a loan is made is based on data. Bank needs access to information about the person to actually underwrite the loan, to make sure that there will be repayment on the loan portfolio. But that access to the data comes from centralized institutions, consumer reporting agencies. TransUnion, Equifax, and Experian are the ones that are well known in the United States. They also operate globally. And unfortunately, the challenge is that access to the data is quite expensive. Expensive for 2 reasons: because it costs a lot to collect the data into a big database and secure it. And also, the quality of the data can vary widely. So in order to underwrite a loan for a person who may have a thin file, additional data may need to be procured, or the data that has been previously made available needs to be verified. And so it can cost the bank anywhere from $30 to $50 to $60 to actually acquire enough data to make a decision about making even a small dollar loan like that. And if you think about it, I'm not a banker myself, but it's not a very good business to be making $500 loans when it costs you $50 to acquire a customer. And so what ends up happening is a lot of customers like that, they are underserved by the industry. Banks either do not want to make loans like that, or are very selective about the types of customers that they acquire. And so a cottage industry of what is known as payday loans has sprung up, where through storefronts or online, consumers like this get enticed into taking out loans that are just terrible financial products. They can have 400, 700% annual percentage rate, which is very expensive. So it may cost a person like that $500 in costs just to take out $500 loan. So can potentially take a form of a vicious cycle or a spiral, where a person is taking out loans to pay off previous loans. And so clearly, a situation that is not optimal for a large chunk of population. And that is just one use case, but that is true more broadly, that data, particularly employment data, is an important component of many products in many industries. And so having robust access and the ability to guarantee the quality of the data is very important.
And I guess as well, like in your example, Alex, $50, $60 when the loan's approved, I guess there'll be many occasions where the loan is not approved and they're just, costs on top. So it makes the business even more expensive for the financial, the person providing the loan. I'm also thinking as you were talking there, in the current economic climate with interest rates going through the roof and cost of living rising, the problem that we describe here, the 20 million or so people, that number is only going to have grown, I would imagine, in the last kind of 6 months, 9 months.
Yeah, because mortgages in particular are becoming very expensive. A lot of them have been written with the variable rate, and so as interest rates go up, people's mortgage payments start to go up, which further reduces their disposable income, which further puts them into a position to look for credit, which they can turn to credit card, which in the United States has just now crossed $1 trillion, all-time high, wow. Which on average, by the way, is also 20% interest product, so not an inexpensive way to take out credit. So we think that solving this problem is important at all times, but is very relevant in 2023, where the economic environment is very uncertain and is unclear when it will become less so.
Yeah, of course. And how do you then use, so we have, so what you've described, Alex, is what we could call a reasonably sized amount of what I call verified data. So data held by an employer about an individual. So we can know that the likelihood is that data is pretty good, pretty up to date, because employers obviously tend to need to know that stuff. And of course, they know someone's position, they know their salary and the types of information that a lender would look for. How does verifiable credentials fit into this use case for you?
That's a great question, Nick. The way we think at Merit about this is kind of in terms of inherent trade-offs that companies make when they deal with data. So if we think about anonymity, utility, and security, 3 different attributes of data: ability to preserve the privacy of the person disclosing, ability to have enough information to make a useful product, and then ability to control access and prevent misuse. It has traditionally been thought of that you can only have 2 of 3. So it's impossible to be anonymous, and provide utility and security. And industries have chosen different ways to operate based on those trade-offs. So for example, in healthcare, data is typically privacy is a typically top concern, and data is very secure, but as a result, there is not a lot of utility. Consumers typically don't have access to their own data, and it's very difficult for them to make products. In financial services industry, different set of trade-offs was made. Financial services industry is very concerned with security and utility of the data, but the way they have solved for privacy really led to creation of these centralized entities where information about consumers is widely available in these databases, and so very prone to crime, identity theft, but also financial fraud, money laundering, and other bad things. And it has been this way for a long time, and nothing really has changed much in technology landscape to affect that. But with advancement of computer science, really, in cybersecurity, particularly with verifiable credentials and zero-knowledge proofs, we now start to see potentially a shift in the trade-offs between anonymity, utility, and security, where perhaps we can achieve those same levels of compliance and same levels of protection while creating better products while preserving the privacy of users. In particular, zero-knowledge proofs is a type of encryption that allows the consumer to reveal certain information about him or herself without jeopardizing complete set of data. And verifiable credentials is a way to use encryption, amongst other things, to make it very easy for consumers to present information about themselves while maintaining things like selective disclosure, where they can choose what the institution needs to see. So we think these technologies are now developed to the point where they become practical for the types of use cases that we want to address, particularly in financial services industry. And so with this mission that we feel very passionate about, to make better products for more employees worldwide, we are in the business of commercializing this technology. There is still a lot of work to be done to make this technology easy to use in the context of these use cases.
So it sounds like, Alex, from what you're describing, Merit Protocol are kind of sitting as a connecting technology between employers and financial service companies, and enabling the employees sitting within the middle to be able to access financial services, but do so in a way that's kind of privacy enhancing, almost like the holy grail of IT, giving those anonymity, utility, and security all at once. Is that a fair assessment of where you see Merit sitting in those relationships?
That's exactly right. We bridge companies that make products, banks, lenders, insurance companies, and others with employees.
Yeah.
And we focus very heavily on using a company, an organization, or an enterprise as a bridge to make that happen. In many cases, a lender is willing to extend their what they call credit box set of criteria that they use to make a decision about the loan, if they get access to more higher quality data or a bigger pool of customers where they don't have to spend money acquiring them. But it's very difficult for them to do because employers traditionally are very risk averse to begin with. But if you were to go to an employer today and tell them that we can make loans available for your employees more easily, they will automatically default into an assumption that they're selling the data of their employees, because that's how the industry has operated for a very long time. And so we make it our business to change that.
Yeah.
We want those products to be made available without compromising anonymity.
And like any startup that's probably at the cutting edge and almost kind of paving the way, you're having to, I imagine, Alex, go through a kind of lot of education. So what Doc has found over our own commercialization journey over the last 18 months to 2 years so far is that it's becoming less so, but we found at the start that actually needing to educate, so not only saying, look, there's these great features and benefits of this technology, but then needing to educate them about actually getting to understand how it works, so that they know what they're buying and what they're getting themselves into. It sounds like you're going through that similar process yourself at the moment.
Yeah, I think that's certainly true. I have emphasized both in terms of what we do at Merit, but also just thinking about my own previous experience, spending time to build an AI company just before that, and we've started doing that, almost 10 years ago. And just as we record this podcast, it's just now that there are consumer use cases like ChatGPT, where to an average person it is becoming clear how powerful the technology is. So it did take some time from the point where the technology is becoming usable to the point where on the main street you stop a person and they can relate to what this technology can do. I think we're not there yet with certainly verifiable credentials, nor we are with zero knowledge proofs. But I think it's important to look for partners who are early adopters, who see the potential, who focus on use cases that are painful enough today that application of this type of technology can relieve the pain. And that's what we focus on right now. Finding those institutions, lenders, banks that already are engaged with employers, that are looking to build better products, and are looking for ways to access that data in better ways. And we're a small company, so having one or two key partners like that uh, makes a lot of difference, and we were very excited about the progress that we're making in that regard.
Fantastic. And out of interest, a slightly kind of left field question, Alex, but what you've been involved in lots of businesses at different stages. Some obviously going as far as going public and very well established business, some startups as well. Do you have a preference for stage? Like, do you find that you're at your best at the start when everything's a bit muddled and you're trying to find product market fit? Or do you find that working in a much more organized, established business is more interesting to you? How have you found that over the course of your career? Do you have a preference?
I think more and more. So I kind of gravitate towards earlier stage. Uh, Obviously means earlier stage businesses, but that could also be as a part of larger enterprise. I find it very interesting when companies are trying to take a technology that is going through early stages of its curve of adoption, and technologies get adopted in what is called an S curve, meaning that initially very few people use them, oftentimes almost as a toy, and those technologies oftentimes are kind of disregarded or have people have condescending attitude towards them. But as those use cases become more powerful, as the proof points come through, more and more people adopt until eventually the laggards come in, and few remaining enterprises jump on board. My interest is in earlier stages of those S curves. So whether that is within the context of a company like Merit, where I'm very excited to build it, or at some point in time I was involved in consulting business at EPAM, where we as a firm helped other companies navigate those types of challenges. That's where my passion is. I'm a technologist myself. I wrote assembly code and when I went to high school, and so saw the technology move from that point where you needed to almost write binary code to today, where GPT-4 can consume natural language and do many things that I can't do. It's very exciting, and it's true that those technologies are very powerful. At the same time, they need companies like Doc and like Merit to tailor them to the use cases, because companies don't wake up every day thinking about like, let me see what other new technologies are out there. They wake up solving their customers' problems, and so they need other organizations to help them.
Do you think you would? Do you see yourself? I mean, Chat GPT is on everyone's lips almost wherever you go now. It's the first thing that you see in the morning and the last thing that you see at night. Do you think that? Have you got plans to integrate AI and machine learning into Merit Protocol's offerings? Do you see a roadmap for that in your future?
We do use AI, particularly privacy preserving AI, which sometimes is called federated AI or differential privacy, kind of different technical terms, which goes to that trade-off between utility and anonymity. In order to find the best product for a person, the more data you have about that person, the more likely you are to find a better match. And so companies train AI models that do that. However, in the context where we want to preserve the anonymity of the person, minimize the data that is being shared, and perhaps even share it in an encrypted form, the utility of AI can be dramatically reduced. So there is a subset of machine learning field that focuses on building machine learning models that are trained within data isolated environments, but then their learnings are combined across multiple environments to create kind of a one model that doesn't have any private information, but yet is able to incorporate that. In fact, many people don't know, but the technology first was popularized by Apple, where when you plug in your phone overnight, it actually is training a machine learning model on your phone to recognize images that you have without sending those images to Apple and revealing your private family pictures or anything like that, which obviously would not be great. They came up with that use case where machine learning model is trained on a phone. Yet, if you have good pictures of, houses, and somebody else has good pictures of houses, both of you will have a better search for house when you type it in your phone. Similarly, we apply that in our use case. Within one company, you may not have enough employees or enough engagement with the product to really understand what kind of person would be the best fit. But if we combine employees across multiple companies, we can create much better matching between the product specification, the type of a loan, and an employee. And so we use the technology in combination with encryption to target those products, and then make the process of acquiring the product more seamless.
Got it. And is that technology still running today, Alex? The one that you mentioned, so is everyone's iPhone out there just now kind of going through that machine learning process?
Yeah.
Wow.
I know it's just happening more and more. iPhones have neural engine. I forget what Apple calls this, but a subset of its computing power is a special chip that performs what is called edge AI computations on your phone. Part of them is applying the machine learning model, but part of them is also training machine learning models.
Okay. Oh, interesting. I never knew that at all. I'll be viewing my iPhone with suspicion now, moving forward. But that's good to know. And what do you see the impact for this technology, Alex? Moving more back to Merit's current offering, like, what do you see the impact of this new way of working, this new way of offering financial services? What kind of impact do you think it's going to have on the industry?
Yeah, I think it could be quite profound. We talked about that $50 cost of the loan. We think we can bring that down 10x. So make it $5 by removing unnecessary data verification, by reducing by not storing the data and thus removing the cost of needing to secure it, by connecting consumer with an institution more directly through more efficient engagement mechanisms. And I think that moves it from unfeasible to a good product for many institutions. So with that, we hope that more institutions will be making these types of loans, and so these more predatory parts of shadow banking system or a banking system will start disappearing, and so people will be in a better position to finance their personal life.
Yeah.
And that is in that one use case, which on any average day in the United States, for example, there is 500,000 people looking for a loan. So it's quite a lot of people, and so it makes a difference every day. But as we expand that to insurance, as we expand that to even online commerce, where transactions are now becoming smaller and smaller, and loans are becoming smaller and smaller. Almost everyone has an experience with buy now, pay later loans, where you can finance, small appliance purchase right away. Today, those loans are very poorly underwritten because it's very difficult to get enough information about the consumer in the context of an online transaction and get reliable information. Again, you don't want to pay $30 to obtain it. But if a consumer has control over their data in a way where the data has known provenance and can be cryptographically authenticated, why can't they present it online during the transaction and get a better discount? We think that eventually this will proliferate. Eventually, people will have better control of their data. Employment data, is our business, so we're working on that, and we'll be able to interoperably present it in different use cases, from shopping online to getting a job to getting a loan.
Yeah, and it sounds powerful as well. I mean, you're getting benefit right through all the stakeholders in that loop as well. So you're getting potentially a 10x reduction in the costs of the financial service company underwriting that loan, but then also the individual is going through less red tape and having more control over their data. So it does seem like a really compelling use case.
Yeah, it can. The consumer experience can be terrible. You go through 60 screens on your phone, re-entering same information many times, and And you may not, only 40% of those loans get funded at the end of the day, to your earlier point. So the UX is terrible, and the 10 data points that the lender needs, employer has all 10 of them. So why can't a consumer get permission to take control of the data and pass it along to the lender? I mean, it just makes sense. We're just eliminating waste.
It does, and it's like as soon as someone points out like that concept to you, it's almost obvious. It makes perfect sense, and you kind of start to wonder why has no one done it before. But I guess it's because obviously having the technology that's not really existed, and then of course putting it all together is not always that easy either. And that probably brings us on to so Docker obviously helping with the credentialing element and also the wallet side of your solution. So the ability for these credentials potentially to be stored by the individual in a kind of convenient place, which is typically your phone. We've talked about phones already today. What made you choose Doc, Alex? That there's a few other providers out there. Obviously, that's how you and I met. What made you choose us to partner with you?
Yeah, there are definitely options. We look for alignment on the mission first and foremost. We want to work with an organization that is also making it their business to enable consumers to take control of their data, to work on decentralization in the sense of reducing reliance on centralized institutions or institutions that potentially could engage in predatory behaviors, which is very prevalent in financial services industry. And so Doc was obviously being focused on blockchain and implementing this technology through that ecosystem is a good fit. But also we looked for a partner that creates a secure, reliable solution that that can be made compliant with GDPR or other consumer protection laws that exist in different jurisdictions. And so when we kind of put all of those criteria together, as much as there are many different options, Doc kind of emerged as the one that we felt we are aligned with. But also, teams working together. You and I have found good
Yep,
cadence and
definitely.
ability at the early stage to get attention. Work together on the roadmap, which is what we're doing right now, is also very important, and we're getting that here.
Great, yeah, that's great to be partnered with you as well. So then, kind of zooming back, Alex, I know that you obviously through this conversation, technology is something that you can tell is like a deep interest for you as well. And I know from the kind of venture firm that you're involved with as well, you'll be very close to blockchain. You'll be seeing lots of emerging solutions that use blockchain and obviously in a sustainable way. What makes you most excited in the Web3 space just now?
Yeah, I think there are so many things that it's almost like difficult to pick some. As you mentioned, I am involved with a firm called New Layer, which invests at the intersection of sustainability and blockchain technology, which I think is a very exciting place to be. It sounds narrow initially, but if you think about it, the sources of energy that exist today, there in many ways are underutilized. A lot of energy is stranded. I don't know how much you spend thinking about it, but you've probably seen a gas flare, a pipe sticking in the sky, just burning gas. Uh, it's a byproduct of oil and gas industry. There are thousands of those, even in the United States, but many more worldwide. And the reason why that energy is burned off is because there is no easy way to consume it on site. Distribution costs money, and there is no easy way to attract off takers to consume that energy. And so, blockchain and technology industry offers a solution there as well, where remote data centers can be built at a very small scale, installed on site to instead of venting that gas into atmosphere, could be routed to a generator that powers compute environments that sometimes are used for mining Bitcoin, which is a ready-made use case which anybody can engage in. but it's not too hard to imagine that energy like that today is essentially wasted, can be routed to compute environments that could, amongst other things, power ZK-proof computations, which are very compute intensive, or AI inference computations. And I think industry will evolve that way, that decentralized technologies that shift current trade-offs, they will become more prevalent over time. And Web3, with its playbook for how to incentivize participants through sharing in the economies, I think is a key element of driving the speed of that adoption.
Yeah. Oh, nicely put. Yeah. It's an exciting space, and like even just thinking, going through those examples there where you do think about all the lost energy and the use of blockchain to try and harbor that into other use cases. I'm sure you see a lot of interesting pitches come your way. My final question, Alex, is we talked about the future for Web3. What's the future for Merit? Where do you see you guys going in the next kind of 5-10 years?
Right now, we're very focused as a small company on kind of 2 to 3 year time frame, partnering with key institutions. We are very excited about the relationships that we're developing. We can't quite talk about them publicly, but we will together when we launch that, in infusing their products with privacy-preserving technology so that they can make better products or distribute them in innovative ways. We're very excited about a mobile wallet that we are building together with Doc that will be launching pretty soon. That will help with education, making it clearer for employers and employees how verifiable credentials, how ZK proofs work, and what does it mean to quickly scan a QR code and be able to prove certain facts about yourself instead of doing 60 screens online. So even small wins like that, I think, are very important in moving things forward. But when we think about 5 to 10 years, we think that this technology will be widely spread and will be inside financial products, but also within e-commerce, as I mentioned, or even things like hiring. We're working right now with a company in recruiting space that wants to use our technology to reduce fraud in recruiting. For example, in India last year, almost 20,000 people were let go for fraudulent reasons. People lip syncing their interviews. Interview one person, another shows up. There are identity issues and kind of security versus anonymity trade-offs in that industry as well. And so if we can make Merit make better experiences, including hiring experience for companies in 10 years, that would be terrific. That's consistent with our mission.
Fantastic. Yeah, it sounds like there's lots of different avenues for Merit to go down. But Alex, I wanted to thank you for coming on. I really appreciate your time. The conversation's been super interesting. I could talk to you all day about all the different aspects, but for the sake of time and also our editor needing to go through all this stuff, we'll leave it there. But thank you very much for joining us on Identity3.
It was a pleasure. Thanks, Nick.